Hi, and welcome to the Stock Scores Market Minutes for April 23rd, 2018. This week, let's talk about the importance of trading with the group that is winning in the market. Trading is like paddling a canoe on a river. You can paddle with the current, or you can try to go upstream and battle against it. Now, of course, we know the answer to what is easier. We need to understand what the market's current is for the time frame you are trading. And I want to emphasize that last part, for the time frame you are trading. If you are a day trader, it does not matter if the market is in a long-term up or downward trend. What matters is what it's doing in the very short term. So if you are holding stocks for months, then you want to be looking at the weekly chart. If you are holding stocks for weeks, you want to look at the daily chart of the overall market. And if you're only holding for just a few hours as a day trader, then look at the intraday chart of the overall market. The question is simple. Are there rising bottoms or falling tops on the chart? And that helps you answer who is winning and therefore who you should be trading with. So let's look at the chart of the S&P 500 and we can emphasize this point. The bottoms had been rising, but we've switched this week to falling tops. That means in that time frame, it is now better to be a short seller than to be a buyer. The long-term upward trend is what we see on the 3-year weekly chart. And I can draw a line across those bottoms and you can see that we are in a long-term upward trend. And so if you are a long-term trader, you want to still be long of stocks. However, notice that over the past 3 months, we've had falling tops. And so if you're trading in that shorter term time frame where you hold for maybe a couple of weeks, it has not been a good time to be a buyer. There's not really a strong trend. What we have is some pessimism along with a lot of volatility, and that makes it very difficult to trade that time frame because the volatility whipsaws you in and out of positions. Now that volatility is good for the day trader because there's lots of room to move when you are trading on the 2-minute or the 5-minute chart. So if you're a long-term trader holding for many months, you still want to be long of stocks. If you're holding for weeks, you probably want to be mostly in cash. And if you are a day trader, well, then there's lots of opportunity and you should be fairly active right now. Moving along to the Russell 2000, we are still in an upward trend, but we have been sideways for the past few months. That's not a bad thing. That's building a base for a future move to the upside as long as the upward trend isn't broken. But it means in the last 3 months, there hasn't been a lot of opportunity to be a buyer of the market or really a short seller. Nothing's really working over that time frame. On to the Toronto Stock Exchange. It broke the cycle of falling tops this past week. And we now have some rising bottoms. So that's good, largely motivated by the strength in oil. Big picture though, we are still pretty much sideways over the last month, and so it's been a bit of a grind in the Canadian market, but there is some pockets of strength that have arisen in the last little while. Long-term chart, similar story. We've got that sideways action over the last few months. We're really stuck in a range here between those highs and lows. Not a lot of trend. Well, I guess the trend is sideways, but it's not like here where we had an upward trend where it's easy to be profitable being long. Right now it's tough. You have to really be very stock specific to be making money in the Canadian market. And on the TSX Venture, what is the predominant mood? Well, we have falling tops. Now in the last couple of weeks, we've had some rising bottoms. And so if you're trading very short term, there's been a bit of a bounce back in many of those stocks. And we're right on the precipice of breaking this downward trend line. We need a strong update right here, and that would be a sign of excitement that we haven't seen for some time. So this is a market you want to watch fairly closely in the near term if you are that person who likes to trade for days or even weeks, because this market may make a break soon of that downward trend line. We've certainly seen a comeback of late. This is an important chart this week because the bond market has basically broken this little upward move that was underway for a number of weeks. We were in a long-term downward trend. So that little break to the downside is now going to test this support zone. I don't think we're going to break through it near term, but we are testing that support in the bond market. Now that's important because if we break that support in the bond market, it means that interest rates are likely to rise or are rising. And that is negative for the stock market, negative for the economy. So you want to keep an eye on that. If interest rates start to rise, it could be weak for stocks. And that's probably why we had some weakness at the end of the week last week. Moving along to the US dollar, of course, if interest rates in the US are rising, that makes the US dollar more desirable. So it had an up week last week, but it hasn't quite broken the downward trend line yet. So that's what we want to watch for. Is it going to break to the upside, breaking that downward trend line? We are building some short-term rising bottoms, but until it breaks the downward trend line, I wouldn't get too optimistic. It's just on the cusp of making a turnaround. And gold has been in this long-term pattern. It has had rising bottoms, but it hasn't been able to break through resistance. And until it does, I'm not going to get too excited about buying gold stocks, but that's always something to watch for. If we can get that breakout through 130 with some good volume, it will be interesting to look at those gold names again. And the oil market. I've drawn here this week the daily oil chart, and you can see that we are in a nice upward sloping channel. We're getting near the top of the channel with some strength recently, and so wouldn't be unreasonable to get a little bit of profit taking near term, but the bottoms are rising, and that means the buyers are in control. And so you want to be looking for opportunities as a buyer in the oil stocks because we do have optimism in that market. And finally, the fear chart, the VXX. Well, certainly far above where it was, so we have a moderate level of fear. We sold off on fear leading into this week, but we've had a little bit of stability off of support here, and that implies we may see a bounce back. Further weakness in the US stock market would cause the VXX to move higher. I don't know that it's going to move significantly higher, just like I don't think the US stock market is going to move significantly lower this week, but the bias to the downside is there. So my outlook then, neutral long-term for US stocks, just because we're testing that long-term upward trend line. Bearish short-term, we did see a little bit of a breakdown on the short-term chart for the US stock market. Canadian stocks faring a little better this week, likely because of the strength in oil names, and so we have neutral on both time frames. Gold, neutral on both time frames. We're not going to get bullish until we can break through that resistance. And oil, bullish on both time frames. The weakness in US stocks late in the week indicates we may see more of a pullback next week, perhaps motivated by rising interest rates. Canadian markets are stable, helped by the oil market. Oil is strong. Gold is a parking lot where there's not a lot of action, and fear is rising again. All right, let's look at the trade of the week. And I often will look at bullish action candles as a cue to buy. But this week, at the end of the week anyway, the last couple of days, the market's bias was to the downside. And so I used the same concept, but with a bearish action candle. You can see hopefully on this chart, the little yellow dot right there, that signals my bearish action candle indicator, something available to my active trader students at stockscores.com. And we had a signal to go short of MXIM, along with many other stocks on Friday, including Apple, for example. And the market moved steadily lower, giving on this trade a 5-to-1 reward for risk ratio. That means for $1,000 risk, there was $5,000 of profit. A decent trade on a day when the bias to the downside was negative, and therefore short selling was the way to trade it. Well, that has been the Stock Scores Market Minutes for April 23rd, 2018. I hope that you've enjoyed it. If so, click on the like button, click the alarm button to get instant email updates, subscribe to the channel, and most importantly, trade well.